What's up, y'all? I'm going to be breaking down these two losses that I took today that will ultimately be helping me improve and make my strategy better and more accurate, right? Just because I recently really dove into learning the 2022 ICT model and just came off a week of, as you can see here, I passed my top step funded challenge, right? Kind of got lucky, right? I mean, I kind of know what I'm doing with ICT, but at the same time, not really, right? It was more so just, knowing what my winners were, and, you know, scaling in on my winners. So I took bigger wins than my losses, right? But I honestly was just all over the place and wasn't trading with no accurate strategy and just was all over the place. I mean, as you can see, the day that I passed, I took 52 trades, right? I started out really good, like I was doing really good, right? And then just started crashing out, right? But somehow passed it. And then as soon as I got my funded, instantly just all that showed up again, right? Just instantly had big red back-to-back days and almost blew my account. I got all the way up to like $1,900 in drawdown, which my max drawdown limit is $2,000, right? So almost blew my account. Thankfully I didn't. Thankfully it was Christmas, and so I spent all those next days just really locking in on the 2022 model in ICT, and just back testing and testing all of that, right? And as you can see, as soon as we came back to trade, we had a $181 day, $63 day, and these are small wins, right? But that's only because we only had $100 left in drawdown, so I was only risking like $20 per trade. And I'm trading MNQ now, which is, micros instead of just NQ. So, yeah, I'm not going to go over these wins. I mean, they were very clean trades. I'm going to show you pretty much exactly what they were at the end of these two losses because, of course, if I was patient and I knew of these mistakes and knew to, watch out for these mistakes that I made, then I could have hit the winning trade that we were looking for. That happened right after my second loss, but it's all good. As you can see, I do have my daily loss limit now is $50, and so I did hit that $50 limit today, and so which I make sure that it locks me out automatically until the next trading day, so I don't tilt and overtrade and don't break my rules, because that's what I was doing all last week. I had no rules in place. I had no real strategy. I was just, gambling, honestly. But now we're locked in. I'm gonna go ahead and break down these two trades that I took that were losses and that I will be definitely learning from, right? So starting out, let me point out, well, first we had that huge weekly opening gap, right, that we're trading in. And we had liquidity sitting at these lows over here as well. And so we broke down into this new week opening gap, and as you can see, it had not been filled yet. This traded down to the consequent encroachment of that gap and then reversed, but we still had all that space to fill, and so that's why we seen this crazy drop instantly. But also, let me point out, this is not very common in Asia session at all. I currently can only trade Asia session because I still work a job, so as soon as Asia opens, we have a 100-point drop, which is not common for Asia, right? Normally I'm looking for like a 50 to 40 to 50 to 60 point range and get my trades in within that range, but crazy drop, right? So instantly I see we had a huge draw on liquidity on those lows over there, and we tapped into the low of that new week opening gap. And so I had my draw of liquidity here, right? Now my first mistake was this. You see this here? This is somewhat of a high, right? But at the same time, it's not very clean at all, right? And we only get, our our next candle isn't even a bearish candle. We get this one bearish candle, so it's somewhat of a high. Not really though. In my opinion, I should have classified this as a high. Normally, I like to get my trades in at like 7 p.m. and so in this case, I should have just been more patient, which I let that get to me as well. But anyways, we rocked out and hopped in. We had this somewhat of a market structure shift here, right? So first off, we had our draw on liquidity, which even this here we could say was our draw on liquidity, right? And now what we're looking for is a market structure shift. And so in this case, we were waiting for price to break a lower high and make a higher high. And so I classified this as a market structure shift, right? Which really I should have been looking at this high here. As you can see, we did not break that high. But market structure shift here, somewhat, and we did get a clean fair value gap at this market structure shift. And so I had my limit set here. We got tapped into the trade, had my low here at 611.50, and as you can see, instantly got stopped out. So had like a $25 or it was like a $30 loss or whatever. So that was my first loss, right? I had highs targeting this fair value gap up here, as well as maybe this one too. Very small, but it is a gap up there, which what I've seen in the past when price makes long runs like this, they tend to have fair value gaps all the way through here, but eventually price tends to trade back to that very first fair value gap that was presented. So yes, we had this FEG, but we also have this one up here, so gotta pay attention to those, right? This one was already traded into, so we weren't too worried about that. And this is where we have our new week opening gap high, which can, act as resistance or whatever. But, ICT preaches that all the time. These levels, are very key levels for seeing price react at. And as you can see, it tapped here, bought back up, and it wasn't trying to break below, but it was fighting in between that gap, this FEG here, and that new week opening gap high. So boom. All right, let's get into trade number 2. So my first mistake was this market structure shift. That shouldn't have been a market structure shift for me. I should have been more patient. I should have been looking at this high, if anything, and waiting for that to be our market structure shift, right? But anyways, move over here. We had somewhat of a draw on liquidity here. This is my second mistake, right? Because I saw this as a draw on liquidity, but as ICT preaches, we want to see spike price really shoot through and break that liquidity, right? I mean, we had all this liquidity here, so I mean, even if I kind of looked back at this one, we could kind of counted that as, a draw on liquidity, but I mean, I like to see this one here, right? Just because we have so many spots that, so many wicks here that could have been our draw on liquidity, but I believe that my second mistake was this, as we can see that we didn't really get a true push above that draw on liquidity. As you can see, the candle did not close above. We want to at least see one green candle close above our draw on liquidity, and then our next confirmation would be our FVG, right? So we got a clean IVG here, fully inverted this FVG. Now, again, I counted this as a market structure shift, which it really is, right? We had 4 bearish candles here, pushed down, it really was, somewhat of a clean market structure shift. But we had our limit order sitting here. Stops were roughly around here. I think we got stopped out right at the top of this FVG though, just because of our personal daily loss limit got triggered. But anyways, even if we was able to get stopped out here, we still clearly got stopped out, right? target was down here at these lows, and then also had my eyes on this FVG here as well. And so, boom. Now, obviously, this would have been, pretty decent trade, but again, I just should have been more patient. I'll definitely be making sure that we get draw liquidity with the candle close above that high or low, and then, just overall a clean market structure shift, because as I'm going to show you here shortly after, let's see what, 12 minutes after we get the trade setup that we were looking for, right? So, boom, as you can see here, we get this market structure shift here. Draw liquidity. We could have counted this as a draw liquidity, but as you can see, we didn't get any FVG or market structure shift on this push down. So instead, we set this up for the real setup. So we got our draw liquidity here. And as you can see, price even stayed below. We did not trade outside of this FVG, but even tapped into our first FVG here that was created on this big push down, right? So tapped into that there. I'm going to delete all of this so it's not distracting us. So yeah, boom, had that clean tap right into that FVG. Reacted, as well as tapping off of our new week opening gap high. So we could have saw this as, clean reaction point. Clean reaction point here, closing in that gap, tapping off the high, new week opening gap high. Didn't close above, the candle did not close above this FVG, and we had a draw on liquidity. Had a clean, this is a very clean low that we took out here. Again, we're in an uptrend. Higher high, higher low, higher high, higher low, higher high. Boom, market structure shift here. Breaking this clean low, giving us a clean market structure shift, right? And what do you see as well that we got? A FVG. Now, I did not want to see this FVG get traded into just yet, because I wanted that to sort of act as our breakaway gap, right? But we did have this FVG up here, so as you can see, that did end up getting traded into and had some sort of a reaction, but we had a clean market structure shift here, and I wanted to see this low here kind of hold as, resistance as well as the FVG. So what we could have done is, boom, could have had our limit right there. Stops could have been above the candle that our FVG is on. And again, like I said, I had my eye on this here, specifically right to the, because ICT counts these gaps as, part of the FVG, right? But specifically, I wanted to see it tap, into, if let's say we did have our FVG right there at that Wicks low. As you can see, it tapped right on that, so that could have been our TP. And just as you can see, would have been a 10-minute trade with barely any drawdown, risking 3.75 points. Crazy trade to make 21 points. So overall, would have been a really clean trade. We're not patient enough, and so overall, again, we're going to want to see our candle close above that draw on liquidity, and also we want to see clean highs or lows in our market structure shifts. And as you can see, clean draw on liquidity here. We even had extra confluences of tapping into this Fibonacci gap and tapping into our new week opening gap high with a clean market structure shift here, clean, fair value gap here, taps right into our fair value gap. We had no candle closures above our midpoint, although we did trade through here. That's why we put our stop loss at the candles above the candles high in a bearish fair value gap, right? But we didn't even have a candle close in the fair value gap, so that would have been, while we're in this trade, we would have been able to, be more calm and realize that this is this fair value gap is being respected, right? Because we're getting clean rejections, as you can see in those wicks. So ultimately, I would have been managing it, and as you can see, the real move happened in three minutes, right? I probably would have had a sell limit to take some partials at these lows here, or no, this low here, because we always target our closest low or FVG, and ideally want it to be at the midline of our overall run. So as you can see here, this whole leg up, our consequent encroachment 50% level is right at these lows. So I would have had partials sitting right there, and then would have had full take profit at this FVG, and boom, would have been a very clean trade. So yeah, just a little breakdown, complete transparency again. Bell blew my account. We're gonna continue going at this, having a very solid and very fine risk management to try and bring this funded back alive. I really believe that we can do it, as long as we stick to our rules, don't overtrade, which we're not even allowing ourselves to overtrade because we have this in place. I think when I get to a $500 drawdown limit, or when I get back to $1,500 in drawdown, then I'll have $500 left in my space that I can have a drawdown, right? I'll then move my risk up to $100, and we'll be taking bigger positions, because obviously if this was one contract, I mean, we could have definitely had a $500 day here, but it's all good. Or more than $500 day. 2175 times 20, yeah, like $500 day, one contract. But we're gonna chip at it day by day, bit by bit. Right now we're shooting for like $100 to $300 in profit per day. So yeah, that's where we're at. But again, complete transparency, and it says 5 trades and 10 trades, but that's just because I'm sure most of you know that TradeZella doesn't do, every time you enter one mini contract, they count that as a trade. So in these trades, I was scaling in, so I only took one position on these trades, but I was scaling in. I did take a little loss here, but I got it back in the Asia session. This is because I tried to trade during New York session at 8 a.m. as you can see, and that's one of my rules that I broke, where I only want to be trading in Asia session at the moment, because that's what I've done all my testing with. I know this works in New York session, but I only want to be focusing on Asia session right now, because that's what my main focus has been. So as you can see, these very small losses, this is because I was scaling into these trades, or scaling into this trade, and so where my stop loss ended up being was above where these trades that I scaled into got entered. So yeah, that's that. And then as you can see here, 5 trades. Again, we scaled into this one as well, but overall we only took 2 trades. But yeah, full transparency. We're gonna try to turn this funded around from Top Step, and yeah, I'll catch you all in the next one.